All right, give a couple claps. And is your video working or no?
You know,
Not really.
It's always worked for other podcasts, but I've had problems in the past. But
yeah, it's not getting it.
Indeed.
All right, no worries. We'll just be an audio version. Not a big deal.
All right,
we can work with that. All right. Hey, everybody. Welcome to the Multifamily Legacy Podcast. I'm your host, Corey Peterson. We've got a wonderful show for you today. My guest, Gary Lipsky, is with Break of Day Capital, and he's got a really unique story in how he had come really from the passive side, where he's invested in over 1,500 units passively, and within the last 6 months, he's kind of started the process, and he's closed over 170 units. He has a wealth of knowledge and a wealth of experience. I'm going to let you kind of give you a little bit better, but he's the founder of Break of Day Capital. He was the founder and co-president of ARC. Is it ARC?
Yes.
Which he grew the company to $12 million in revenue and over 700 employees. So he comes with a lot of business experience, and I think the way he the way he has gone about his education in the multifamily space and his explosion and what the growth is getting ready to have is going to be an amazing story to tell. And so, Gary, welcome to the show, brother.
Hey, thanks for having me. I really enjoy your show.
Thanks, man. So as we're talking before the show started, you know, the journey, and you kind of made it as a metaphor of an iceberg. You know, when you look at an iceberg, you only see like the tip of, you know, what comes out of the water, but most of the time what's below the water is ginormous, is a lot bigger. And that kind of, you were saying, you know, that's kind of what it took to get from the passive side to the to actually owning your own units. Let's talk about that, brother. That's pretty neat.
Yeah. I think a lot of people, have commented on fire and things are really cooking, and they have been, and I'm really excited for it. But certainly everything I've done in the past has led up to this moment. The lessons learned, the mistakes, all the hard work has brought me to this point where now I can really rev up. And my business partner and I goal is to actually do 50 million assets under management in the next year. So we're really excited. But I've been an entrepreneur my whole life. Even as a kid, I was doing entrepreneurial activities. I owned a business in college. Right out of college, I co-produced 3 films, independent films in my 20s, and then started this after-school outdoor ed and leadership development company in my early 30s. And I had been investing in real estate previously, but I went through a recession. And that business was like always, we'd have receivables of like $1 million. We had, and the bank at that time just shut us off. And so, having that, knowing how to manage people, having a steady hand, and kind of being a solutions-oriented person really led me to multifamily, which is a great way for me to use all the skills that I've learned in the past and apply it in this format.
It's almost like the perfect storm. Everything that you've done before is leading you up to what you're doing now.
Yeah, absolutely.
So how do you go from, what made you pick multifamily in the beginning? And, and you started just investing passively, right? So tell me about that experience.
Yeah, well, even on the houses that I bought personally for my family, I always looked at it as a value add. I never wanted to buy the perfect home. I always looked at it like, okay, this house needs a little bit of work, but boy, that's great value. And little did I know that was going to lead me into, the future. But I did, worked on some rehab projects and whatnot. And that was kind of my entry into investing, as I would roll that house over into another, and then or bring on a renter and move somewhere else. And then I started looking at, some small units, but never really pulled the trigger. And I had sold my business 3 years ago, and that kind of gave me the time to invest personally in my education, and it also gave me some money to invest. So, I was going to tons of meetups, listening to podcasts, going to real estate conferences, and just learning a ton and kind of figuring out where I wanted to be, because definitely in real estate, there's so many ways to make money, and everyone's selling you their package. Everything looks really sexy,
Yeah. Done for you.
Yeah, exactly. But luckily enough, I kind of stumbled on multifamily, and it definitely spoke to me. Now, when I started, I had the mindset, coming from as an entrepreneur. Certainly, you want to build teams, but you don't want other partners, as an entrepreneur, because just decision making, and people could be in a different place in their life and all these different things. So I was looking at like 12 unit stuff, and there'd be one or a couple things wrong. It was hard to make that work, and it was just slow moving. When I finally changed my mindset to partner with other people, and going to these meetups and conferences, I was surrounded by a lot of like-minded people, good people, shared a lot of information, and that for me was like rocket fuel. Didn't mean I wanted to partner with everyone, but I found someone that I really enjoyed working with, that worked really hard, that pushed me, that brought the best out of me. And that kind of really helped for us to go out and we closed on our first deal in May, a 42 unit, and then we just closed a few weeks ago, a 128 unit, a $15 million deal in Phoenix. And we're off and running. We've got
right on, man.
Yeah, thanks. And certainly we increased our team too. I mean, we had 5 other partners for this last deal, but that's how you get a big deal done. Sometimes you got to bring on other people, and we're bringing on more people for our team, and looking to close 3-4 deals in the next 12 months.
So I love the part of being resourceful, right? I mean, that's what I'm hearing when you're saying, hey, listen, you set a course, you kind of found it, you kind of stumbled after you go through all the education. You're like, but you resonate with the multifamily. Is that what that sounds to me what you said, right?
Yeah, absolutely.
And then from there, you started networking and just trying to be as in many things as you can.
Yeah, and I was that guy that in the beginning would go to a networking event, talk to a couple of people I knew, talk to maybe 3 other people, and then like bail, because that was like pushing me out of my comfort zone.
Right.
And each time I would network a little bit longer and a little bit longer and a little bit longer, and until I got comfortable with it. Finding other people, and talking with other people, you just learn what they're doing right, what they're doing wrong, helping other people, and other people were helping me. So it was great synergy, and I felt jazzed leaving those events. And so the next day, I'm ready to work and kick butt. So I definitely recommend it for those starting out, and even those that have been really successful. It is rocket fuel.
You run currently now 4 meetups, right?
Yeah,
different
3 in
markets.
Los Angeles, and 1 in Phoenix. I'm out there in Phoenix looking at deals or managing my own property. So we're out there all the time. So we do that once a month, and it's a great way to meet other people. And then we also bring on some really good speakers. So it gives me an opportunity to learn from those speakers and people that come to the meetup as well.
What do you notice about when you're the host of a meetup? What happens?
Oh, that's a great question. People come to me. They, which is great. So whether they certainly they'll ask questions, how can I help them, and I'm happy to. But other people have brought deals. They're looking to invest
money. Yes.
they'll help us with setting up the meetups, whatever it is. I definitely recommend hosting your own meetup and finding a niche, finding something different than what other people are doing. You don't.
How many people showed up to your first meetup?
In Phoenix, for both meetups, I probably had a good 40 plus people. We're using a platform, Multifamily Masters. I think we have 40 chapters throughout the U.S. now. But when we started, it was just a bunch in L.A., and that's helped. And certainly we've hyped it up on social media.
That's actually really good, though. I mean, but again, that's being smart. You just said, "Hey, listen, I don't want to create it from scratch. Let me find out how to be a part of something and have them help the lift," right?
Yeah, absolutely. We have a pretty good, I think we have a 2,000 member Facebook group now, and yeah, so it's a lot, again, it's that rocket fuel. You know, I don't have to do everything myself. I'm leveraging other opportunities.
I love how you just categorized the meetups as rocket fuel, because there is power in those groups. Am I right?
Hell yeah.
What I mean, you just said it earlier, but I mean, deals, money, people, resources. I mean, those are all the things that show up at meetups.
Yeah.
And this is really why it's important, I think, to run your own if you can, or why you should be looking at it, or at least attend, is because you can still be part of that. But like when you're the leader of the group, it all trickles back to you most of the time.
Yeah, absolutely. And we've found some good people that are joining our team. You know, they're like, well, we'd love for you to mentor us. And you know, I kind of chuckled like, hey, you know, I'm no expert, you know, but
you're in front of the room.
Yeah, I can share you the things that we do well and what I know and my strengths, and I will help you. And they're jumping in and wanting to help us too. So it's great.
Dude, so I love that. So, because I think this is, I feel like this is what you're doing is, you know, there's always a learning. You're always trying to learn, and then you're always helping others. One hand's up in the air, someone's pulling you up, and you got your other hand down, pulling someone else along the way. And really, I think that you see that at meetups all the time. There's a lot of people that are willing to give, and then what you get in return is you get to live out your fantasy and your dream and your goal of, and when you're currently doing it, is becoming an operator.
Yeah. I'm learning from experienced people, or even beginners, that they're looking at it a different way. So lots for me to learn, and people have definitely helped me. So it always feels good to give back as well, to help
Let's
others.
talk about mistakes along the way. So you've acquired 2 decent sized units. What did you learn on those first 2?
Oh, learned a lot. I think you used the word earlier, resourceful. You always have to be resourceful. You know, you face a lot of obstacles along the way. On this current deal, you know, this was end of August. Fannie Mae kind of changed, really tightened up the lending and whatnot, and we pressed pause just as we were about to launch our webinar, which isn't good, because we didn't, we had a buffer in there for our loan, as far as, they said it was going to be 4.2. We had it at a 4.4 rate, and we had our loan to value higher as well, but we weren't sure where the lending market was going to go. So we pressed pause and let it shake out for the next 2 weeks. Once we knew it was more stable and Fannie Mae opened up again, then we went through. But we were debating for a while how does this look with the investors and whatnot, but we wanted to get it right and not go back to our investors. So you explain to them what's going on, you take a deep breath, and you move forward. So that was one of the things we did. Also,
let me just highlight that for you, because really this happens a lot. Is we underwrite at a certain LTV or whatever, and then the banks they'll give you a term sheet that says that, And then, but somewhere in the middle, they're like, no, it's going to change. And you're like, what? I just raised all this money based on these calculations, right? Or at least that, I mean, that, and then, or the rate changes and you're like, wait, hold on. This
have to build in
changed.
that buffer.
Yeah. So it's important to have some buffers in there just in case. Am I right?
Yeah, we build in a lot of buffers because things will go wrong. Rarely is something going to be perfect. Certainly in the last 8 years, you have to really screw it up to lose money on a deal. But that doesn't mean the future is going to be that way as well.
Right.
So.
Exactly. Yeah. And so what else is some big learning lessons on those first couple? Because
Well,
I mean, those are
dealing with a seller who's a pain in the ass from the beginning, it's not going to improve.
Tell us more.
Yeah, so be wary of that, and you may want to walk away. I mean, he was a ball buster every step of the way, and even things that just made sense for us to like work together on. He just was just wasn't realistic, and we should have known from day one when we agreed on an LOI, and we get a contract from them that was completely different. He never shared the LOI with his lawyer, which was ludicrous. And so we thought the deal was over, and then kind of got resurrected again. But you have to stay patient and have to stay true to your numbers, and things will work out. And if it doesn't, if the deal goes sideways, it doesn't, you don't end up closing the deal, then it is what it is. But you've got to stay steady and not chase a deal just because it's for us, it was our 128 unit, but just because it was 120 units for us and all we did was a 42 before, we've got to do what's right for the investors and not stay in a deal just because we want to get a big medal on our resume,
Right. Yep. No, exactly. And it's really, so I find it interesting that you're having the seller provide a contract. Now, is that something the broker recommended, or is that just something that they said, hey, we'll write up the contract. You give us the LOI, we'll write up the contract?
So we've worked with the broker before, and they've worked with the seller before. So they kind of steered us that way. That's just the way it was going. I guess.
No, it's your first couple deals, right? So you're going through it, and I love this because this is just you're being as raw and as authentic as you can possibly be, because this is what happens.
Yeah.
Brokers tend to be like, oh, listen, yeah, we'll draw up the contract. Now, I believe in that we should, as I've gotten more experience too, because my first couple deals I bought that way as well. But I've learned that it's sometimes better to have your attorney draw up the contract, because I swear to God, just like you just said, they change it.
Yeah.
They absolutely change it. You're like, are we reading the same piece of paper?
Yeah. Absolutely.
So that's a good lesson. I mean, that's a real lesson, and that's a real life. I mean, that's a real good example of, hey man, we're going through our process. We bought one, now we're going to buy our second one, and we're trying to be a good buyer. That's what you're trying to do, right? I just want to be an easy buyer. I'm here to buy your property, and I'm assuming that the seller is going to be just as nice and play nice.
Yeah.
But he wasn't.
Nope.
And then he fought you probably and everything. He changed all his terms. He tried to muscle you as much as he could, right? Did he increase your earnest money at all, or did he? Where did he really try to screw you?
Yeah. Well, even at the very literally
timetables change.
The fire panel busted near, and they got a write up, and this was right before we were about to close. So the lender's like, they need to fix it, and the seller's like, we're not fixing anything. So we had so much back and forth between legal and the lender and the seller and the broker, and finally we got to a place where the lender okayed us to fix it afterwards. And there's just there's just so much back and forth between everyone.
And meanwhile, you're under contract and now your money's hard.
Yeah.
That's where the real rub is, right? That's like when you're in that hard, all of a sudden, like, which is what you're talking about is a fire code violation, right? Is that what you had? A fire code?
Yeah. And so, we've got, a property management company saying, if you need to repair everything up to the new, code and whatnot, it's like 170,000. But if you just fix this one thing, which should be okay, it's only like a few $1,000s, and you have this huge variance, and that'll
and you're still trying to figure it all out, and the lender's saying, hey, listen, we got to have it fixed or remedied or something because we don't want to lend money based on this problem. Well, but it's also a new problem that you didn't anticipate. That is it in your CapEx budget, right?
Yeah, absolutely.
And then who's going to pay, and why am I at fault? And then the seller, this is what sellers do. They're like, well, what's in the contract, right? But you're like, listen, I'm not going to buy the property. I can't buy the property unless we negotiate. We got to figure out how to fix it. And that's a real good live scenario, because that's the realities of what happens once you get into this game. Now, so it's still a great game though, right?
Oh, I love the action. Negotiating and doing the numbers and all that. That's what I love about.
What did you love? What did you love about those two projects? What did you do right? What did you feel like you did, like you really did, like just we smashed it?
Well, for both properties, we were very meticulous on our underwriting. We're very conservative. We have buffers, throughout, so that if you do face an issue like this, that it still makes sense to move forward because you have all these other buffers in there. And
when you talk about buffers, tell me what do you mean by that?
So, if the property manager says, oh, we can get to $1,250 for this 2-bedroom, and you underwrite at $1,200. So even if the comps all suggest you can get $1,250, we have that $50 of margin to get to, and you multiply it over so many units over 12 months. That's a big buffer right there. And if you have a little bit more in expense money throughout, because things change on a dime. So you better have margin for error. So, if the tariffs go up and you're trying to buy cabinets or whatever it is from China, and your costs go up 30%, you need to have some margins for error, because things do change.
That is another great analogy. Is what you're talking about is underwriting conservatively. And most people and I love the way that you say it with confidence, Gary, because I think that's what it takes. I mean, like you didn't put out your best case scenario to your investors. You actually put in something that's very realistic, that you felt like, even if it gets worse, I even underwrote it for worse. So I'm cool. We're shooting for the moon, but if it doesn't happen, then I'm still okay.
I'd rather overperform and underpromise. A lot of deals, are boosting, 18% returns and this and that. And we came out, I think it was like 15 and a quarter IRR, and, reasonable 8% cash on cash. Every deal can look sexy on paper, and I could have underwrote it a little bit more aggressively, but I'd rather under promise and hit the marks and make the investors
give them what they expect, right? Give them what they expect.
Yeah.
How does that make you feel going forward? Like, what kind of confidence does that give you?
Oh, absolutely. It's when you're first underwriting deals and you just don't know what like you haven't gone full cycle, you're just not sure. Like, did I underwrite it conservatively or not? And then when you show other people and they're like, oh man, you really wrote it conservatively. Like some of our partners said, they're like, no, this is great. This is a home run. But Yeah, I mean, you
But it
got
looks like a base hit on paper,
yeah,
right?
yeah. And it's fine because it's still better. I'd rather have my money there than anywhere else. So, with the nice tax benefits and everything else. So,
How much
uh,
money did you guys raise in your first couple deals?
first deal, we raised $1 million. On the second deal, we raised 5.7.
Had a boy.
Yeah. Yeah. I mean, we brought on some other people. There was 3 of us on the first deal, 6 on the second deal, but yeah, it was a big jump. And I've been working my investor database and just building up to there. And it was exciting. And look to continue to increase the amount I raise and on the consistent basis as well.
What do you think you've done that's helped move that needle on your raising capital?
Well, build my email list. I think when on the first deal, I had like 300 people, and now I have 1,000, and that was all in a few months. And between the meetups, and then we also do a webinar every month. We're adding a lot of new emails every month, and it's just an email doesn't really help you as much. Certainly, you may get a couple of outliers that want to invest and come to you, but certainly you've got to have meaningful relationships with people, and you're not going to have them with everyone, but keep trying to work it. If people want to get on your list, they come to the meetups or they join the webinars, have conversations, meaningful conversations, see what people are interested in investing in.
What are you talking about on your webinars every month?
So we've had some CPAs come on and talk about past tax benefits. We've underwritten a couple of deals. The last month we did Passive Investing 101 and went over terms and what to look for. So we're really trying to educate others.
So it's not the same pitch every time. This is your nurture campaign for your passive investors.
Absolutely, and we really don't do a pitch. We'll do like 2 minutes on what we're doing and really get into the meat. And we've gotten great feedback on those webinars. People love the content.
That's a great idea. I'm actually taking notes on that because I think that's a phenomenal, something I'm not doing. But I'm like, that's a great idea. That's a really good idea that I'm like, duh, I should be doing that.
Yeah, it doesn't have to be long too. And we have a Q&A on the at the end, and we're just talking about what we know. And
I mean, at the end of the day, that's not even a big commitment for you, but it's a huge amount of value to your passive investors that just want to understand that you're in the mix of really doing it, and the right ones show up. And do you send out the replay afterwards?
Yeah, it's on our YouTube channels, and so we've had people come to us and say, "Hey, I've watched it 3 times. I love it. I've learned so much. Keep doing them."
Oh, wow, that's a great nugget, man. So on top of all your meetups and stuff like that, you're running a monthly webinar, and the focus is on passive investors. And are you going and talking more about so your CPA, just every aspect part of the deal, right?
Yeah, absolutely.
Oh, wow, that's very interesting, very cool.
And we brought on other experts as well to join us. So it's not just us talking. It's we're learning and we're bringing.
You're being a thought leader. You're just saying, hey, listen, if I don't have all the answers, I know I'm gonna go be resourceful and find them.
Yeah. Yep.
Oh man, that's huge. That's huge value. Like, listen, guys, if you're listening right now, write that down and underline it twice. That's a great way to nurture your list. So growing lists is one thing, but nurturing the list that you have and creating a more in-depth relationship and for them to know, like you, and trust you. What do you find that it does for their wallets, Gary?
Oh, absolutely. They're opening it up because if you're keep looking for the same investors in the pond that we're all fishing in, then it's not that money dries up fast. You've got to find other people that really don't know about this and then educate them so that they're ready. And once they're educated and really understand it, then they're really they're ready to invest.
That is the game, right? It is really, that's a great nugget, Gary, in that learning to, because what you're talking about is there, a lot of times they're sophisticated or I'm sorry, accredited investors. These are smart people that make money. They just don't know, they've never heard of a private placement or how to invest in apartments. They're usually just in the stock market. And there's, I mean, so many people out there just like that. Wouldn't you agree?
Oh yeah, yeah, and they almost think it's like, oh, it's too good to be true.
Yeah.
It's a sham.
Yeah. I mean, the whole, what you're doing is overcoming their fear of who is this guy? Do I know him? Can I like him? Do I trust him? And that's only conquered by communication and time.
Yeah, yeah. Some people, I mean, they're all in on day one, and some people, it's taken 6 months, and some people it'll take longer. But they're watching me. They're getting wrapping their head around it, and a lot of the people that haven't invested will invest down the road at some point.
Gary, from the first deal that you did, you raised money on that first deal. How many reinvested in your next deal?
I think we had like 75%. Some just didn't have any more money, and some, we found, our investor lists increased, but I believe we were around 75% that reinvested, which is, I'm pretty happy with.
That's amazing. That's actually amazing too. I mean, if you get, I mean, 25 or 50% of people, because people always, the reason I want to say this is people have more money.
Yeah.
They always do. And if they know, like, and trust you, and you did really good on their first one, they'll usually come on your second too.
Yeah, and they're telling others too, like, hey, because that first deal, I mean, we scheduled, we were thinking a 5-year hold based on our projections, but we may sell it in a year because we're killing it on it, and we're on target for our 5-year projection at the end of year one, and so they're getting their mailbox money, they're telling others, and we're getting investors that way too.
Oh, that's amazing. Yeah, I think you're hitting it on all cylinders. So let's finish off with, your future. What does the future hold for Gary?
Well, we're constantly learning, improving our processes, and building our systems. And then the next year, we really would love to do 50 million in assets under management, and that means we're utilizing our operational experience. Like I said, I've been an entrepreneur my whole life, so I know how to work with other people, be solutions oriented. So we want to just keep growing this and making money for.
And I love how you say 50 million, but it really means like 2 projects, maybe 3, right?
Maybe 3, 4. I mean, it all depends, but that's we're not merely focused on the size of the deal, but just expanding our reach.
Just go out there trying to find the right deals that make sense, and then putting them together.
Yeah, absolutely.
And then marrying them to some money.
Yep. And we have a good team in place, so let's just keep doing what we're doing.
Gary, what's the best advice that you could give someone out there that's new, that wants to get into multifamily space?
Take action. You can't. You're not going to be able to close a deal by sitting in, behind your desk and only underwriting. Meet people. Get out there. Go to meetups. Go to conferences. Go, check out properties, meet with brokers. You have to take action and be out there, and don't work in a silo. Partner with others.
To partner with others. What would you say what mistake would you try to let new investors avoid?
Every deal looks sexy. So, get to know the operator. Just don't look at, the offering memorandum and that's your only due diligence. When you look the syndicator, the general partner in the eye, and do you feel comfortable with them, and get to know them, that is so vital before you invest.
No, dude, you just nailed that one on the head. Because, and that's from a passive side. I mean, that's really just saying, listen, if you're going to go into, and it really could be even with the GP. If I'm going to jump in with this guy, that's the GP, and I want to be a part of it, of his team. But who is that person? That's, I mean, because you never know, and you really need to do some due diligence on it.
Yeah. Are they going to stick around if the deal goes south? If are they on to the next one? And you just because you got a deal doesn't mean it's over. You've got to asset manage that deal and stay on top of the property management, and then go visit that site and do secret shopping and do all this stuff. That's where the work really begins. So you make sure that person has that business background who you're investing with.
Yeah. Gary, man, thank you for your time, brother, for really just kind of opening up these two deals. There's no doubt in my mind that you're going to be a huge momentum going in the future. If people wanted to get a hold of you, Gary, how do they do that?
Yeah, email me, Gary@breakofdaycapital.com. You can visit my website, connect with me on LinkedIn or Facebook. I love connecting with others and talking real estate.
Love it. Listen, again, thank you for your time. Thank you for your stories, the tremendous value. I think, for anybody that's out there and you're starting, the multifamily game, I believe, is one of the best things you could ever get into. It gives you upfront money, it gives you cash flow, it gives you some really nice back end when you hold these properties long enough. It truly is the trifecta of what we would all want in real estate. And at the end of the day, I believe wholeheartedly that it can give you time and money. But to do it and to achieve it, it first starts in between your two ears. You have to believe it, guys. You have to believe that this is the route, and then you start making and tracking your journey to your success. Because if you believe it, you can achieve it, and your paradise is possible. Cool, man.
Thanks for having me.
Yeah, dude, that was a great show, dude. That was really good. I mean, that was just talking about those stories. That was really, that was good, man.
Cool.
Super excited. So I'm behind on podcasts, so this could potentially go out next Tuesday.
All right.
So we'll get it produced in here the next day, and it could be this next coming Tuesday or the Tuesday after. So it's going to be one or the other.
All right, great.
But we'll give you an email out, and we'll ask that you help share it on all your media and all your social media. Get it out there, push it.
Absolutely, I appreciate it.
All right, thanks, Gary.
All right, take care.
Bye-bye.